All right, right now we are just hours away from the pricing of Facebook's IPO. It is going to be the largest tech offering in history. Our next guest says this stock in the next 5 years will double in value to $200 billion. We are joined right now by one of the elder statesmen in the venture capital world. It is our pleasure to welcome Dixon Dahl, co-founder and general partner at VC firm DCM. He has more than 35 years experience in the industry, considered one of the top venture investors. And still, of course, with us, we have Todd Schoenberger, our guest host for the day. Anyway, welcome to you, Dixon. Welcome to Street Smart. Tell us
It's nice to be with you, Trish and Adam.
Why are you so confident that Facebook is valuable right now?
It's a once-in-a-lifetime company, and it's truly transformative and very exciting, and it's going to do a lot of amazing things. There's just no question that it will join the likes of Google, Amazon, and Apple as one of the most important companies in the world over the next 5 to 10 years. And there are a lot of aspects of their strategy that they're still evolving and that they haven't worked out yet. But this is a great team, and it has a critical mass, the likes of which we haven't seen in many, many years.
But Dixon, what about all the criticism about the company's perceived inability to really monetize its user base? I mean, they just haven't been able to do it thus far. So a lot of people feel like this valuation, this number that's being put on this company is really all a bet on the future, and it's not clear really whether they're going to get to that future.
Let me be clear. I think the valuation that it'll come out at tonight is fully valued. Make no mistake about that. But I think the opportunities that they haven't really tapped yet are massive. Mobile is one of the most rapidly growing and explosive trends in the world, not just in the U.S. these days. It's in the very early days of that. They admit freely that they haven't figured it out, and I'm sure that they will eventually. Big spending brands are going to experiment with Facebook until they get it right. They'll play different tests to evaluate the optimal ad strategies for various screen sizes like cell phones and iPads. And I think they'll go into new businesses very much like the deals business that Groupon is in. And I think somebody needs to also look at when you're evaluating their future growth prospects. There are a number of countries out there in the world now where they are not allowed to operate, so that would be another issue that I would look at carefully. Some examples of those would be China and Iran and Syria and North Korea, and who knows how many other countries might choose to ban Facebook if there are social upheavals in those countries.
Dixon, you just mentioned some numbers, and you're an ultimate numbers guy, so let me just walk us through valuation. So it trades at, let's say, make the numbers easy, 25 times sales. Google trades at 5 times sales. In order for the stock to double from here and ultimately have the same valuation as Google, in effect, it's going to have to up its sales by 10 times just to look like Google 3-4 years from now. How's it going to do that?
It's going to do that very deliberately, and I don't think that that is an unrealistic estimate. I've watched a lot of IPOs over the years here, including Apple, Google, Amazon, and Baidu, and I think it's very important to point out that there was only one of those 4 stocks that didn't actually retreat after its IPO, so that people that are looking at this thing need to make their own decision about that. Google did actually go up very significantly after its IPO. It's roughly a 10 or 12x now from what it came out at, and it actually never did go down. But Google, everybody with the benefit of hindsight would say that Google was underpriced at the time when it came out. Certainly in relation to this one, for sure.
Yeah, Dixon, one of the things that concerns me is that there seems to be such a retail appetite, but not as much of an institutional appetite for this one. I mean, a lot of smart investors that we're talking to, and you're obviously not in this group because you're a real fan of the company, but a lot of investors are saying they're going to rent this stock. They're not going to buy it to own. They think it's going to do well in the very near future. And part of that's because you've got every mom and pop investor out there saying, oh, I know this company. I understand this company. I want to be part of this. And so, forgive me, the expectation is that they'll go out and buy. That'll give the stock a pop. But long term, people have their doubts.
Let me just be very clear here. I'm not commenting on the short-term opportunities for getting the IPO and flipping it. I'm talking about a long-term buy and hold strategy, and I think retail investors seldom get this kind of an opportunity to come along, and so patience is going to be required. You're going to have a lot of trust in the management and the board of this company, but those are the kinds of bets that smart investors, have to make. And I feel really confident about the positives outweighing the negatives with respect to Facebook.
All right, we're going to
okay, never mind.
No, I want to hear it. Go ahead.
I was just going to say, one point that needs to be made here is if Facebook only goes up 5x from where it comes out now, it'll be the biggest market cap company. It'll be bigger than Apple, and I think people need to think about that. And that's going to be definitely possible for them to do, but it isn't going to happen quickly, and it won't be easy. But I think it's a realistic bet to make, and so that's why I was talking about a double in the next 5 years.
Wow. All right. Our thanks to you, Dixon Dahl, co-founder and general partner at VC firm DCM.